What's going on, YouTube? Welcome back to the channel. And if you've seen the headlines by now, bank stocks are crashing. People are talking about us going back into another regional banking crisis. So today I want to talk about what exactly happened to the regional banks to cause this sell-off, how it happened, and what this means for us moving forward. So let's get into it. Let's start with what triggered all this. It's primarily two regional banks, Zion Bancorp and Western Alliance Bank, that caused alarm bells to ring. First, Zion Bancorp reported it needed to write off $50 million in bad loans because the borrower could not pay them back and was tied up in legal issues and potentially fraud. That does not sound good. After that news broke, Zion Bancorp's stock dropped by over 11%. To add fuel to the fire on top of that, Western Alliance Bancorp reported it needed to sue one of its borrowers due to alleged fraud. Because of those announcements, regional bank stocks took a big hit, investor confidence plummeted, and the KBW banking index was down more than 6% in just one day. So is this another big 2008 situation or a 2023 regional banking crisis? Well, let's take a look at how exactly this happened. So the first cause of all this is bad loans. Zion Bancorp reported that the $50 million losses were due to two bad loans that were much riskier than they actually looked. And Western Alliance's trouble came from what they claim is a borrower misrepresenting their finances. So these two isolated instances were not due to the economy overall. They were really due to just the bank lending out loans to the wrong people or not calculating how much risk there actually was in the loan. The second cause here could be credit stress or rising costs for the banks. With interest rates still being elevated, borrowing costs are higher for businesses, so some of those businesses struggle to pay back those loans because of the higher borrowing costs. Also, banks may have made these loans without assessing all of the risks because they want that sweet yield, and now it's coming back to bite them. And with all of these concerns being at the top of the headlines, that can cause fear in the market. Other banks and investors are worried, are we next? Are we exposed to some of these bad loans or fraud? And this could cause some distrust in the banks or overall sell-offs in that specific sector or the market as a whole. So in summary, a mix of bad loans and fraud, tougher economic conditions, and shaken confidence in banks is what really caused this sell-off. So what does all this mean for the economy, the banks, and for us as investors? Well, being that we had bad loans and fraud that was a primary cause of this sell-off, we could see regulations start to tighten. So banks might have more strict guidelines on who exactly they could lend to. And that could in turn cause to less businesses being able to obtain lending and could slow down growth in the economy. But as we look at these isolated instances, it's not like a 2008 situation where this was a system-wide issue. And unless we see this trend start to continue, we'll probably forget about this sometime in the next week or so. So for the long-term investors out there, this probably means very little moving forward. Keep focusing on your goals in the long term. And let me know down below, what do you guys think about this? Is it more of an isolated incident? Do you think this trend could continue? What do you think caused this big sell-off? And if you like this content, subscribe, hit the like button, follow along for more, and I will see you guys next time.